all macro assets trade within a range, and Bitcoin just entered that, and it dropped. And it wasn't like zzz, it was like zzz, boom, boom, step change. And that happened 2018, 2019. And the question is, what happened in 2018, 2019? It was the financialization of Bitcoin. We had the perpetual swap, we had calendar futures, paperization of Bitcoin.
In recent months, the cryptocurrency community has been buzzing with excitement. This surge in enthusiasm came shortly after a tumultuous crisis in the U.S. banking sector, which propelled Bitcoin's price to over $330,000 per coin. The big news that fueled this excitement was BlackRock, the world's largest asset manager, announcing its application to the Securities and Exchange Commission to introduce a spot Bitcoin ETF. This announcement was warmly welcomed in the Bitcoin community, not only for its uniqueness but also due to several compelling factors. Firstly, the timing was impeccable, coming less than a year before the next halving event, historically a precursor to significant bull runs. Additionally, BlackRock's sheer size as the world's largest asset manager, overseeing more than $9 trillion in total assets, made this development particularly astonishing. The prospect that a significant portion of their institutional investors might allocate some of their portfolios to Bitcoin stirred anticipation, potentially bolstering its price and attracting a flood of investors. BlackRock's substantial influence on U.S. regulators, with a remarkable track record of approved ETFs, further raised expectations for broader approval of cryptocurrency-related offerings. Nonetheless, not every Bitcoin investor shares the same level of excitement about this new phase of adoption. Some, including the prominent on-chain analyst Willy Woo, caution that it might be premature to celebrate BlackRock's interest. Woo suggests that instead of the expected institutional adoption and price rallies, we might witness unconventional price manipulation tactics. Willy Woo recently shared his insights during an event hosted in Sydney, where he delved into the current state of the Bitcoin market, the spot Bitcoin ETF, the halving event, and his unique perspective on what to anticipate in terms of prices before and after the halving.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
It's changed a lot, because I'm a tech guy, and when I got into it, it was this new thing, a new, not well understood technology. So that was really interesting to me to be able to throw myself into something that wasn't well known and try to make sense of it. And I think in the early days, it was very much about, wow, this is something that's very, very disruptive and can change the world. And to a big degree, that's what I still see it as, is like we are moving into a digital age. More and more of our lives are enveloped by what's online and digital. And, it sounds extreme, but I'm really believing that nation states will not survive. They'll be around, but they won't be very meaningful in the next century ahead. And if you think about what happened in the past, we had empires and kingdoms and royalty, and not a lot of royalty make decisions on how the world works, because we had the Industrial Revolution, and wow, that changed everything. World trade, globalization, democracies came up, very, very nimble compared to an empire. And so I see now you got this internet, and we're talking about the internet state and this complexity which goes beyond national boundaries, beyond geographic borders. And for the first time, we've got this asset that lives digitally, native to the internet. It's scarce. We never figured out how to make something scarce on the internet. Give me a JPEG, I can just print it off, right? And so I think that is probably the main driver. If I think about it from a tech angle, that hasn't changed. I've done a lot of learning about finance. Bitcoin educates. You see a whole world built around it. But I think the main thing is my roots as a tech guy going, we're moving into this future, and this is the first invention of a digital scarcity, and that still holds. You might not want to hear this, really, as Bitcoiners. There's a measure in the finance world called Sharpe ratio, and that really just is measuring risk, like how volatile is your returns over time. Like you're looking at your returns, and we love it. It moons. It's like crazy. We're going to beat every asset, but how much risk are you taking in the volatility of your returns? And Bitcoin was killing it. It beat every other asset on the planet. was like, 3 to 4. That's very high. Now it's dropped down to around 2-ish, something like that. But the thing is, it went like this, and then it went step change, like this. And where we are right now is actually converging onto every other macro asset on the planet, similar to equities, similar to gold, bonds, emerging currencies. Say if I'm the US government and I can print, I've got $20 trillion of capital out there, M2 money supply, you can make policy, you can print more money, you can incentivize particular markets. And the reality is Bitcoin's, maybe $500 billion asset. There's 21 million Bitcoins associated with that. If I print $1 trillion, I can sell for $42 trillion Bitcoin. So this is the issue right now is we've got paperization of these markets, and Bitcoin's traded like any other macro asset on the planet. And I think that's a big worry for me. We're talking about a spot ETF. Okay, we can buy up to 21 million. Well, actually 1 million probably because that's what's available. But in the meantime, you've got these paper markets that have huge ability to control the market.
Willy Woo isn't giving up on Bitcoin, unlike many of us. He maintains hope that the challenges that have plagued Bitcoin over the past year or two will find swift resolutions, allowing the leading cryptocurrency to regain its momentum. During the live show, Woo described Bitcoin as a beacon of hope, emphasizing that the world is rapidly transitioning to a digital landscape, and Bitcoin, despite its obstacles, remains the most coveted and appealing digital asset. Woo goes on to explain that for Bitcoin to truly reach its full potential, it must undergo substantial growth both in size and price performance. He acknowledges that next year's halving event may not bring the relief that some expect, particularly if the prevailing macroeconomic conditions in the United States continue to appear bleak. Here are additional insights from the live show to shed more light on Woo's perspective.
Bitcoin's hope, right? How do you create hope for the world, right? When the world economy is $100 trillion and this asset is $500 billion. It's $500 billion. Say we've got El Salvador wanting to adopt it as a nation-state currency. If we want more people to exit the system, this pool of capital is not big enough for it to be serving larger countries. So it does need to expand. Bitcoin needs to go to the moon. We like it because we hold it, but actually for the greater good, we need this asset to get bigger. And now we've got a mechanism, not we, but the system that we're in has a mechanism to tame that down because you're competing. I'm backing the US dollar because I'm the US government, or I don't know, I'm whoever it is that has an incentive for whatever it is. If it's the US dollars, I want the US dollars to grow for whatever reason, and I want Bitcoin to come down. Like the IMF does not like El Salvador going on the Bitcoin standard because it's against their incentives. So it's really important Bitcoin gets bigger. And right now, we've got a lot of headwinds. I want to go back to like the launch of Bitcoin. Bitcoin was launched at the perfect time, right? We had the world financial crisis. No one trusted the banks. The whole thing was perfect. It was like Satoshi released it post-world financial apocalypse, saying this is an alternative. What did the world economy do? What did the bankers do? Is that they had to save this economy. So they injected massive amounts of capital. And that 4-year halvening, their cycle is every 4 years. There's an injection of capital. I don't know why. I don't know why these cycles are 4 years in the macroeconomy. I know why it's in the Bitcoin because it was set programmatically, but they superimpose. But the key is right now is that this injection of capital on the macroeconomy is happening and the halvening is weakening in power. And as the Bitcoin halvening weakens by 50% each time, right, there's also this other dynamic inside our own industry, which is the Bitcoin trading, right? We used to trade just Bitcoin. Now we trade paper Bitcoin, like we were saying before. I could buy 100 million Bitcoins if I had the collateral. And if BitMEX could allow me to do 10,000x leverage long, I could put in 1 Bitcoin and buy 10,000, right? So you could buy near infinite amounts of Bitcoin. And that creates a huge amount of trading volume. And this amount of trading volume is you can see it already. The spot markets where you're trading the real Bitcoin is very low compared to the paper markets, very liquid. And so let's get away from the volume, but think about what the exchanges are doing. They are making a little fee on top of every single trade, and that accounts for multiple billions of dollars every year. And what do they do with that is they make money, they sell the Bitcoin so that they can pay for the infrastructure, their staff, and so forth. So as this economy is getting more mature, you're getting fees harvesting and dumping. And as of the last halvening, they were equal. The Bitcoin miners were selling some amount of Bitcoin, and the exchanges were selling the equivalent. The next halvening, the exchange is going to sell more than the miners. So you've got the halvening sell pressure reduction is not instrumental. It really comes down to macroeconomy. And so I see it in the last cycle, probably a bit premature, but I said that was the last cycle. And then we had a bear market. But I think that it's going to get really noisy here on in, and we won't see these coherent cycles anymore.
Willy Woo hasn't turned against Bitcoin. Rather, he's expressing concerns about its short-term growth and price trajectory. He's raised significant issues, including the decline in Bitcoin's Sharpe ratio and the emergence of influential players like BlackRock. It's essential to consider parallels with the gold market, where JP Morgan recently agreed to pay over $1 billion for activities like spoofing and unethical business practices. The question arises, could similar issues potentially affect Bitcoin in the years ahead? Feel free to share your thoughts and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.